The number one trend coming in the next 12 months as far as AI is concerned is, in my view, within the risk and credit assessment. And we are already seeing it within the insurance underwriting industry, as an example, where there is a vast collection of data by a number of companies, from what you buy at the supermarket to what you've declared on your insurance, and that's all feeding into the insurance premium that you're paying. I think financial institutions and banks are going to find artificial intelligence very compelling, primarily because of the way it's going to impact their business in its entirety. So artificial intelligence has a number of applications, and I think the very first thing to note about AI is the ability it has to process enormous amounts of data very quickly, and far more data than has ever been processed in the past by humans or computer programs. And that's going to enable banks to do or to improve the services that they provide in the advice that they provide to their clients, wealth management, so they're going to be able to give much better, more targeted advice to their clients, enabling them to use data such as how many cars have been in the car park in a shopping mall, and how's that going to translate into the performance of Walmart on the stock exchange, and should you therefore have it in your portfolio as part of your overall wealth management strategy. We all struggle to live within our means and budget for the income we earn. Well, we have the coming of smart wallets, and a smart wallet is going to be something that the bank can provide to its customers, which will look at your spending habits, and it will learn from your behaviour and how you interact and what's going to appeal to you and what not. And then it'll be a reminder, are you really sure you want to buy this today? Maybe you might want to wait till next week when you've actually been paid. So that's an additional feature, an artificial intelligence feature that a bank can offer to its deposit customers to encourage savings and responsible spending on credit cards. Then there's all the risk assessment and the credit assessments. Now, when you go and apply for a loan for your bank at the moment, a home loan or a credit card loan, it takes a couple of weeks, maybe not so much with the credit cards, they're pretty instantaneous. But with a home loan, it takes a couple of weeks to process, do the credit checks, see if you're a responsible person to lend to. With the advent of artificial intelligence, that time process should come down to less than an hour, and you will have all your loan documentation approved and your loan ready to draw down. And you should have much better quality credit assessment against people, because it's going to use so much more data, so that feeds back into the data point that I was making. So I think artificial intelligence is going to be very compelling. There is, of course, the downside of artificial intelligence, which banks are going to have to counterbalance as they move on their journey towards implementing artificial intelligence for the benefit of their customers. And that's all around who understands the code, who writes the code, what happens when it goes wrong, who owns it, the developers, the institutions, etc. Banks already have software systems that are described as complicated balls of elastic bands that no one knows how to unwind or how to undo the knots. If you introduce artificial intelligence into that, and there are only relatively few people who understand the coding behind the artificial intelligence, then you're really opening yourself up for some fairly high-level risks and regulatory issues if it fails, or if artificial intelligence learns the wrong things, because obviously it learns, right? So what happens if it learns wrong behaviour or the wrong things? So the banks are going to have to balance. It's a balancing act between the positive and the negative, and they'll need to manage the negative because of how compelling the positive story is. I think regulators, obviously, the same as the rest of the world, are aware of it. It's not like AI is something new, it has been around since the 50s, when Alan Turing has been talking about it. What's really happening in artificial intelligence is that it's having its second or third summer, if you like. We have more powerful computers, we have better coding, and so in a sense, what we're achieving with our artificial intelligence is more powerful than we have in the past, and its application is wider. And the regulators in general are considered to be lagging behind the innovators. It kind of goes without saying, really. If you're an innovator, you're at the front of the field. If you're a regulator, you're trying to watch what's happening at the front of the field and making sure that you have laws and regulations that protect users of that. So I think where the regulators are going to end up is they'll be watching the space and monitoring it, and hopefully they'll catch things in time. But to be frank, I think things will go wrong. It'll be much like the GFC, where the regulation will follow the event that has gone wrong and we'll be trying to fix it and to stop it happening again. I think we will see some areas where it will move faster than other areas, and those really are in the credit assessment and the risk assessment, and also in regulatory space. So doing a credit assessment on someone applying for a loan, that's already in place and it's coming through faster than some of the other areas where it's a little harder. You're already seeing it starting to roll out in the interface that banks have with their customers, where they're creating robotics and artificial intelligence to mimic humans when they interact with customer, like a customer service line. So we're seeing it in that. I think it'll move through that fairly quickly. But I think there's a large part in regulatory compliance and risk assessment for the bank. And I think we'll see a lot of AI coming into anti-money laundering and making sure that banks are compliant with their regulations. So it's very easy for an AI product to analyse all of the data that is at its fingertips, if you like, and determine the patterns in the systems and hopefully better identify fraud, money laundering and other criminal activities, and highlight that to the bank more quickly than the human systems or the current computer systems that we have.